Welcome to Real Money Talks. Real strategies from the moneymakers and the world changers that you can use to make millions, keep those millions, multiply your wealth, and build your team. Here's your host, author of 5 New York Times bestsellers, money expert on Dr. Phil, CNN, CNBC, The Street TV, Fox News, and The View, Loral Langemeier.
Hi, this is Loral, and welcome back to Loral's Real Money Talks. This is a podcast that is absolutely about helping you create the dreams, get rich, live the lifestyle of a millionaire. So today we're going to talk about taking a seat and really choosing to be a millionaire. So stay tuned. Hi, this is Loral Langemeier, and I'm here to talk about how do you become a millionaire? You know, how many of you have wanted to become a millionaire? Grow a successful business, have a nice portfolio, know that you don't have to work forever and ever for the rest of your life, know that you have enough money put away, know that when your kids get married or you're getting married or divorced or you're inheriting generational wealth called somebody's inheritance, if you're the one giving it away, like money does not stop. In fact, those of you that are out there, what we're going to have you do is, as you're watching this, we're going to talk about this millionaire matrix, and this will be accompanied by a PowerPoint on the side. So I really want to teach you and talk to you about how to become a millionaire. Now, so I put this in an infinity circle because money starts the day you walk onto the planet and the day you walk off. The problem is we're not taught about money. Who's taught you about money? Right? So if I'm in a live audience, typically somebody would say, well, my parents or a religious institute, or really I kind of went off to college. My parents gave me some credit cards and kind of patted me on the back and said, good luck. And then, 6 months later, you're in huge debt. Then that debt usually continues. Then you leave college with a huge debt. I had over 6 figures in student loan debt when I left. And then what else happens? Then you might buy a house. Then you might buy a vehicle. Then you probably already bought a vehicle. Then you might get married. Then you might have kids. Then you might get divorced. Then you might have more kids. Then you have a blended family. Then you might inherit money. You might be planning to give money away. You want a charity. Everybody that I know that talks about money wants to give back, but they can't even take care of themselves. So we're talking about whatever issue happens. You get up in the morning, you go out for coffee, you need money, right? You drive to a store, you need gas. Like money is in your life. Why don't you know about it? When are you going to commit? The real question in this webinar is when are you going to commit to learning about money in a way that you have never been taught and actually understanding how to act, think, and make money the way the wealthy do? So what we're going to be doing is we're going to be inviting you to a link to get a complimentary money makeover. And the reason you should never do your own makeover is you don't know how. And you're going to notice that in today's conversation. Those of you that really want to be in this conversation, it is a conversation. Money is so critical. And it's time, I think, whatever age you are, to commit a real serious effort towards learning how does money actually happen. So again, however you were taught about money, I have this saying, it's called, so what, now what? So what? How you were taught. Like I grew up in a farm family in Nebraska. We didn't talk about money. Most people don't talk about money. It's not a conversation people have. Most people have very private conversations. They're taught that money should never be talked about. You should never share your salary. You should never, never, never. The truth is, the way that the wealthy live, the way millionaires live, is we share a lot. We share our incomes. We share how we make money. We share investments. We share tax strategies. We actually use a lot of the same wealth team. It's a very open conversation. So I'm inviting you today to listen to the webinar, set aside about probably 40, 45 minutes, and we're going to teach you about money. We're going to start the conversation today and then invite you to have a money makeover. And we're going to give you some structure today. I'm actually going to do the model of one today, and you're going to fill it in. You're going to get called and have call it a private conversation, but you're going to have a conversation with someone on my team, and they're going to walk you through where are you today, where do you want to be, and really, like, when are you sick and tired of it not working for you? Like, it is so time for you to get it together. So I became a millionaire. I'll tell you a little bit of history. So I said I grew up in Nebraska. I actually got a finance business degree, and I do what everyone did at that time where you don't want to go get a job, because I actually had a job for a very short period of time at a bank, and I thought, this is not going to happen. I'm not going to be in a job. So from there, I actually continued on to school, because I always say everybody who doesn't want to get a job gets a master's degree. So I got a master's, but I changed total tracks, and I got a master's in exercise physiology. And then how I jumped into my world was being a consultant. So I was a health consultant. I was paid a lot of money as a 24-year-old, a lot of money. And I was hired by Chevron was my big, I say yes moment. My first, what I say yes and figured it out. And I wrote a book about that. If 5 New York Times bestsellers, and one of them is you have to say yes in your life if you want to become a millionaire. So I said yes at 24. I moved out of Nebraska to New Orleans, and I put my finance and my fitness degree together, and I helped build 272 fitness centers on offshore oil rigs. So I would fly around in helicopters every day, seaplanes from shore base to rig to rig, and I would help design and build fitness centers and health programs for the guys who worked on the rig. So thousands and thousands of men and women worked out there, mostly men, and very blue collar, back injury, strength training, rope swings, if you ever know of the Gulf of Mexico. So anyway, I knew how to do the statistical analysis of how an unhealthy person is causing the corporation to be charged a lot of money in their insurance. So that got me to San Francisco to corporate headquarters. And then from there, I built a lot of fitness centers, from refineries to, just a lot. I traveled all over the world, and it was time to do something different. So that's about 1996, Robert Kiyosaki started, and Sharon Lechter started the Rich Dad, Poor Dad brand. So I jumped from being in the fitness world and the corporate structure world to being a pure-blooded entrepreneur again. So I dropped everything, was making well into 6 figures, to start from scratch, figuring out how to promote that cash flow game. So I spent 5 years in the Kiyosaki Rich Dad Poor Dad camp. Sharon Lechter, I still call her my financial mother. She taught me about money. And it was really at that time where I really got it, is how we are taught about money is so wrong, but it is completely set up. So I'm going to talk about how that all happened in a moment. I'm going to continue on. So after Rich Dad Poor Dad, I started my own first company that was called Live Out Loud. And since then, I've been Shark Tanking since 1999, 2000. Before Shark Tank ever gave what we do a name. And I'm saying we because there is a small group, less than 10% of the planet actually gets it and gets wealthy. Most people wander around hoping, going from program to program to program. Many of you might have bought a big coaching program and it didn't work. And I know you're saying, oh, I'm going to listen to Loral and I'm going to be asked to do something and it won't work. See, that's the self-fulfilling prophecy that you and only you can break. So we don't teach a program, we teach a lifestyle. And I'm going to teach you money and a lifestyle that absolutely could get you what you want. And you're going to be part of a community where you get to talk to anybody you want about the questions you have about money, whether you're having a baby, whether you are getting divorced, do you think you need a prenuptial? Money questions. Those of you that called in or listened to the Susie Orman show, you're learning the old money rules. So since 1999, when I became a millionaire in gas and oil and real estate, I've continued. I've had real estate companies. I've had gas and oil companies. I'm heavily in the cannabis world. In fact, majority of my time is spent in cannabis, and we're doing construction. We're breaking ground in Hawthorne. We're breaking ground in Cathedral City very shortly. We bought that land for just an extraordinary deal. So I love doing deals, and I've been doing more deals than I say just as much as I've done education. So that's a little background. In the meantime, I've been Dr. Phil's money expert, had shows on CNBC, was in The Secret, 5-time New York Times bestseller, all that stuff. So I know how to do it, and I've done it sustainably for a very long time. My goal and passion is to teach you how to do it because I know you've been taught wrong. So let's just start at the beginning, how this whole mess became what it is. 1933, the banking system was formed. Not only was the banking system formed, 7 families, still the wealthiest families in the world, collaborated on how do you create a system, an economy, a government that will actually support the pharmaceutical world, that will support the financial institutes, that supports big corporate, supports Wall Street. So if you notice in my background, off Wall Street assets. So I'm a huge fan of getting off Wall Street. Now, can you arbitrage and can you make tons of money in the stock market? Yes, if you know what the hell you're doing. Most people don't know what they're doing. And honestly, there's so many fees from when you invest in your stock to actually getting a return. It's crazy. So I learned about direct participation, alternative investing, early stages. So here I was in the Chevron era, and I had Chevron stock, right? We just had a huge, huge profit sharing plan. And I was starting to buy gas and oil wells direct. So the difference is I was making about a 42% return. And again, this is just, past performance, 1996, 97, 98, 99, when I hit my millionaire status. But like we hit a well. I was paid, I put in $100,000 and I was making $15,000 to $19,000 a month in cash flow. Crazy. This is crazy times, awesome times. And still today I make $2,000 to $3,000. And this is 30 years later. So I love gas and oil, but the difference was in taxes. I got an 85% depreciation schedule on that direct well that I owned. And I got a massive return. When I put my money into an oil stock, it was in the single digits because there's so many fees. Like when you put money into the stock market, it's totally controlled. That those who have licenses, financial planners, accountants, lawyers, they are protected by their license, but they could give you really crappy advice. Welcome to 2008. Did any of those financial planners that took a whole bunch of your money, made your 401k a 201k, were they sued? Were they punished? Were they penalized for any of that interesting advice? No, because they're protected by their license. In fact, my strategist, my colleague, my partner, Scott and I, we're going to write a book called License to Steal, because I think it's absolutely fraudulent. But the system is designed that way. So you put money in a bank, and they get a 10 times return from the feds to make money on your money. Did you know that? Most people don't know that. So let me teach you about money, because the system's designed that the rich get rich and the poor get poorer. The 2018 tax code, extraordinary benefits for those of you that are planning to get rich. Those of you who just want to stay in the main lane, you're going to have struggle. It's going to be more challenging for you. So you have to do with money all the time, anytime, anyway. So why not just learn to do it right? You spent tons of money on other crap. I mean, let's be honest. 82% of the people who go to college, four-year college, do not do their degree. So how much money have you spent there? How much money have you spent on weight loss programs and fitness programs? I mean, that's a part of your life, but what about money? Money's every day of your life. I always say health and wealth goes together. If you want to breathe oxygen, you're going to spend money. So why do you spend so much money learning one thing and not spending any time learning the core of money and learning it right? So Susie Orman, Dave Bach, and Dave Ramsey are great at the poor game, and we are extraordinary at the wealthy game. So let me get a little flip chart and just show you how this whole thing was designed in 1933. All right, so here's how it was all designed. 1933, right? They go off and say, so let's create a banking system, which creates the pharmaceutical system, which creates the educational system, right? And so if we teach people to get jobs based on their skill sets, occupational jobs, then we'll have a lot of employees, and only a few of us are going to get rich. By the way, those of you who have jobs out there, do not quit your job. In fact, I'm not giving you any financial or any of those advice, so make sure we put in a disclaimer into this PowerPoint. All right, so here's what you're taught. Go get a job, right? And I know you're watching from all over the world, so we call them a W-2 here. That's basically a job, right? They're different, names in different countries. Basically, you work for someone else on payroll. And then most people are taught, well, if you need more money, go get another job. And then less than 50 years ago, women were called to the workforce to create a dual income job, right? So the whole thing is designed. Now, the problem is there's quality to money. In fact, debt is a cost of money. That's not bad. Debt over here in the conversation I'm going to teach you is extraordinary if you use it right. So this is the worst quality of money. Why? Because it's tracked and it's taxed. So here you get taxed two pieces, right? This is huge. This is the hugest taxation of this kind of money. So as you get wealthier, we're going to teach you how to control and reduce your W-2 to only what you need versus overpay yourself. So you make money, you get taxed to pieces, then you might put money into a 401k, right? Or in Canada, it's called an RSP, right? Superannuation, every country has, but basically it's a qualified plan that's based by your employment of the company. So you make money, you get taxed, you have a 401k. Let's see, you might go on these things called vacations. We don't go on vacations, we go on business trips. And then, I don't know, maybe someday you get to do this. Less than about, 15, 20% actually get to do this. So retirement by definition is an agricultural word that means to put cattle to pasture to die. So I don't know why you would ever want to retire. People who live a wealthy lifestyle, they do what they love to do till they walk off the planet. Because we're not working, we're actually living our life. Over here, you have a personal life and a professional life. We have a life. And you're going to teach your kids differently. Over here, you don't talk about money. You ignore it. You think debt, and then here's some other little pieces. Debt equals bad. Here's the most ridiculous advice. And some people, I named their names earlier, and it's not to defame them or hurt them, but just be clear who you're listening to. So most people, right, who live this conversation would tell you to not have credit cards, to live within your means. We're going to soon to be in a full-on digital currency world in the world. How the heck are you ever going to live without a credit card? And without a credit card, you don't have good credit. How are you going to book an airplane? You're going to walk into an airport and pay cash? I mean, I'm sure you could, but it's sort of odd. I mean, 65%, I think is the new number, of purchases online are from Amazon. You have to have a credit card. So this conversation about don't have debt, don't have credit cards, live within your means, that's born out of a 1960 to 1970 Ward and June Cleaver conversation. We're not in that conversation anymore. So you've got to get it right. This whole thing was designed. This started in 1933. But guess what happened before 1933? Everybody was an entrepreneur. So I say, you have entrepreneur in your blood. You didn't even know what a job was. They didn't even have jobs until after this whole era. And it became a worldwide phenomenon. Everybody bought it. It's safe. It's safe. It's safe. This isn't safe. They could kill you. They could fire you tomorrow. Are you kidding? This is the most risky position of life, is to rely dependently on someone else to pay you. The way that it all was done before is think of, the little old towns and the way that they were formed. Think of Haiti. Haiti was like an awesome rebuild. Everyone had to get to the playing field if you wanted to win and become an entrepreneur. Somebody had to bake, somebody had to wash, somebody had to, sell cars. Like somebody had to import, somebody had to export. Like things had to happen. It's called being an entrepreneur, right? So that's how we live. And if you think about it too, I'm going to use Bill Gates as an example. He wasn't just wealthy one day. He started a company, right? He started inside of an LLC. And again, this is American vernacular. It's the same principle all over the world. But these four entities, corporate structures, LLCs, S Corp, C Corps, limited partnership, and then there's trusts, is how money is made. So Gates started a company, puts his money in a company. Guess what? Because you have a company, you get to have deductions. Now, this is getting into the tax conversation. I'm going to bring Scott in just a moment. We're going to get to that tax conversation. I needed to set up a big preview of it. Right now, there's 81,000 pages of tax deductions in the United States tax code. And 2018 is a very interesting year, and Scott and I are going to talk about it. So this kind of money, you get to do deductions. 81,000 pages. Most people don't even use 13 to 15 pages of the code. And your accountant is probably using maybe a few pages of the code. So here you get to do deductions. Then you get to put money into a solo 401k, and you get to put money into a Roth. And you get to put up to $56,000 here. You get to put $5,500 until you're about 50-ish, right? What's the number, 50? Scott's right here being my advisor. See, this whole thing's a team, right? So $5,500 before you are 50 and then $6,500 after. So all this is money. You put all this money away. Then you go on a bunch of business trips, whatever they may be. And those are all considered deductions. Then I'm just going to say you're free. And debt is good. And debt is what we use to leverage your way to a millionaire. So this isn't a program. So again, some of you I know you're in, I'm going to say Rich Dad's program, Fortune Builders program. You're in programs that end. This never ends, right? So we have, and I've created a system, a membership, call it. I wouldn't even say that we do a lot of coaching. We're mentoring. You know why? Because what mentors do and masterminds do is they leapfrog you. They make sure you don't run into very costly errors. They make sure this stuff's set up. And no matter where you are, this stuff always needs to be updated and cleaned up and straightened out and re-strategized. I mean, once you have a child, you need to, make new decisions. But this is how the wealthy begin and live. So it's not a program, it's a lifestyle. But I want you to notice the big piece is it starts right here. The quality of your money. If your money's not made in a company, you do not get the deduction. So over here, if you're a W-2 employee, you can't write off your car. You don't have any right to do it. There's nothing there for you. If you want to write off your cell phone, I just got a brand new cell phone. My company owns it. If you want to write off a business trip, right, as long as you're doing business. That's why I love real estate. I have lots of clients who actually are in the wine business. They can go anywhere in the world and do wine tasting. And guess what? As part of their business, they write it off. There are so many ways to take your hobby. So here I'm going to speak to a lot of you. If you are W-2, don't go run out and quit. I have some pilots, and now they teach flying lessons. Or some of them, actually, a different whole couple, they actually are pilots, and they started a skydiving school. So there's a lot of things. I have cops, firefighters who do handyman services, firearms. I know some of you may not like that, but that's what they do. I have one cop in San Francisco. She now does background checks. So she has a job, and she has a business doing other things that allows her to live this life. So it's not about doing interesting little pixie dust strategies. It's about living your life, what we call inside corporate life. This is all set up. Guess what? I went to finance school, 6-figure debt on school, and I was never taught this. This is taught, I'm not going to call it the underground. Here's what I'm going to compare it to. There's Western medicine, traditional medicine, and then there's alternative medicine. So this is traditional money. This is what you're taught worldwide. I've taught in 6 of the 7 continents, and everyone is taught this crap. And we're not even taught or introduced to this unless you meet people like us. When I met the Rich Dad team, which is what I then took that idea and I formed our whole team. So we have a massive off Wall Street assets team. We have alternative financial planners, tax strategists. We have funding folks. We have self-directed IRA folks. We have every asset class that you will teach you about. Because some of you, you're over-leveraged in real estate. If you're in some communities, you might be, over-leveraged in the stock market. I'd say real estate and the stock market are the two that are over leveraged. Sometimes if I'm looking at my list of off Wall Street assets, and Steve, I'm going to do a cutaway to that list over there because that's an easy way to look at it. Some people are over leveraged in franchise. Some look at the franchise, and I can tell you, name 5 people right now in our community way over leveraged in franchises. They're killing it, but they're over leveraged. Something happens to the franchise, they're down. So our goal is to help you learn money rules, understand how do you live this lifestyle. And once you start this, you don't just lay it down. How do you get your kids to do this? Right? You can start your own entity when you're 18 years old. When Logan was 18 years old, just over a year ago, he got an LLC for his birthday. He now has a C Corp that's added to it, that's held in a trust. We have all sorts of different ways to help you get you and your family what you want. So a lot of this is, the question I want you listening and asking and answering is, what is it that you want in your life? See, when I ask that question to most people, you'll tell me what you don't want. You won't tell me what you want. So this whole conversation has got to get turned around, and you have to learn to live differently, which is why it's a lifestyle. Because right now, you may not need to understand good debt. But you know what? If you want to raise capital, you're going to need to know that. You're going to need to know the difference between debt and equity and which position is better to invest in. You're going to realize that debt's just a cost of money. The only reason you have bad debt is because you don't know how to make money. These aren't just companies that, do deductions. These companies are here to make you money. 6, 7, 8, 9 figures. Like, they're designed to create an ungodly amount of cash. And it's up to you to step in and say, you know what? I might have been in the greatest real estate program or stock market program. I know those of you that are, you learn about gold or cryptocurrency. Those are all different asset classes. We teach them. I endorse them. But the core infrastructure of your life has got to be reset. So with that, I'm going to bring Scott in. We're going to talk about entities and taxes and how you make that gameplay. The one last comment on the sheet that I'm going to make is this place called sole proprietor land. Those of you that are sole proprietor, you're straddled in the middle and you're not committed. You've got to get committed because this gives you some deductions. It doesn't give you any protection, and it doesn't give you any design of the life you want. This is just a short-term little blip to go work for yourself and get a 1099. That is not what we're talking about. We're saying you got to fully commit to live this lifestyle. So with that, I'm going to introduce Scott Arden. He's with the Controllers Limited. And the way that we work, and I'm inviting you to come take a seat at the table, is we work in a team. So he's an entity, tax, and corporate compliance expert. He's got an extraordinary partner. I have alternative financial planners. In fact, if you actually look back here on the board, I'll move out of the way. We have experts in every one of these categories, right? From how do you use life insurance? How do you do automated investing so you don't have to get up with the market, right? This thing gets up with the market and turns off with the market. Creative cash condos, that's real estate for cannabis, the actual business of cannabis, entity and tax, due diligence and money rules, the whole conversation. You can't just piecemeal this. When you piecemeal it, you don't have a whole plan. You have a part of a plan. So our invitation, I'm going to actually keep this up, is to teach you over time how to live this life, and then how to have your kids live this life and how to do it properly. So with that, I'm going to invite Scott, and we're going to go jump on some chairs and do an interview on tax and entity. All right. So again, we are going to be talking about tax and entity. Many of you came to this webinar because you want to learn how to live with less taxes. But really, I needed to set up this framework of your lifestyle because that's where it all begins. It begins where your money gets made. So Scott, welcome.
Thank you.
And talk a little bit about your background and what makes you so brilliant at this conversation.
All right. So I've actually been in the asset protection and tax planning industry for 22 years. I mean, that's really the crux of it. 22 years of experience working for one of the top asset protection firms. Went out, formed my own company, Controllers, with my business partner, Mike. One of the biggest things that we found in this realm, if you will, is that breakdown between your entity or your legal side and your tax side. You always go to your tax guy and he's like, well, talk to your attorney. Your attorney's saying, talk to your tax guy. And then there's this big, long gap in between. And so ultimately, my business partner, Mike Georgie, who's a genius when it comes to taxes.
Genius.
We formed our company Controllers to bridge that gap. And that was really where Controllers came about.
Well, and I think that's why we're such good partners, because that gap is what you, the viewers, is what's happening to you. And when you look at all of this, can you imagine if you can't manage and lead your accountant, right? The entity side to the tax side, which most people don't, right? And then, their books are all messy. And if you run as fast as I am, it's hard as heck to keep up. But then you need to talk to your real estate person. You need to talk to your stock person. You need to talk to all these other people. And if you don't know money, how are you leading this team? Hence why you're in this disaster. If you're in a disaster, it's just, you're in pain. I can tell you, I know, however you are, you could be a millionaire in pain because you don't have cash flow. So Scott, let's talk about bridging that gap. Let's talk about these entities first. Explain the 4 different entities, what they're used for, and then let's talk about how you use them specifically to the 2018 code.
Perfect. Okay. So Laurel's initially talked about the LLC structures. Ultimately, LLCs have become or were the most widely used entity out there. You always hear people say, form an LLC and, you get all the tax benefits. Well, the beautiful thing about the LLC is that it can be taxed in 4 different methods. So it's really dependent upon what business or investment that you're getting into. Right. So, if it's just you and your wife going out to form a company, the LLC ultimately would be taxed as a sole proprietor or disregarded entity.
Right.
But the beautiful thing about the LLCs is that it can actually be taxed like an S Corp to, again, allow for the tax deductions and then still allow for pass-through, which is good for some businesses, especially if, let's say, in the first year you might be incurring some losses and you want the benefit to pass through personally. It's a beautiful thing. But the LLC is also or can be taxed as a C Corp, which means it's actually becoming its own individual taxpayer. So it creates your tax return, and then the company has its own tax return. And then let's say you and I go into business together and we both just want the income to pass through to either ourselves or to our company personally or to our companies, then we can create that partnership relationship. So it is really the most flexible when it comes to management, distributions, things of that nature. Then we have the S Corp. So the S Corp, again, is a lot like what everybody calls a C corporation. It's just a regular corporation. The S election is simply an election that you make with the Internal Revenue Service to allow for the profits and losses to pass through based upon the percentage of ownership.
Right.
So again, still being able to capture losses or some of those distributions of profit. Now, tying into the 2018 tax code, this can be very beneficial, but we need to make sure it's all structured correctly.
Yep.
And then you've got the limited partnership. Limited partnerships are still great for estate planning, asset protection. That's kind of what it's set up for, is an estate planning or asset protection type of vehicle. But because of the benefit of the LLC, the limited partnership has slightly started diminishing. You won't see a whole lot of use of it anymore. So,
I noticed that.
But it can still be a very beneficial strategy, just depending upon the person or the situation, what have you. And then trust. Obviously, trust, there's 2 different types of trust. You've got a revocable trust, which is your standard living trust. Any person who has children, has assets, or any type of beneficiary that they want to make sure that their estate goes to needs to have a trust. Now, if we're looking for the asset protection component, that's where we utilize the structure of irrevocable trust, which basically means that the assets are irrevocably granted to those beneficiaries. So therefore, they cannot be touched by any creditors affecting the business owner. Yeah. And the beautiful thing is it creates that protection beyond that. Let's say one of the beneficiaries has a business or they get married and go through a divorce. Whatever it is, those assets are still going to be protected irrevocably in that trust. Yeah. So the use of the corporate structure, as Laurel said, the rich keep getting richer and the poor keep getting poorer. And the reason...
And who's designing this? Let's be honest. Like, we vote for the tax code. Like, they're designing it, right? In Congress, at Senate, all of it. They're designing it that they get richer. They're designing structures. I mean, I know, having traveled all over the world, I believe, I'm not going to say this for a fact, that America is the only one that has this many choices when it comes to protecting assets and reducing your taxation.
Most certainly.
I mean, most have 2 companies, right? You can do one or the other, and that's kind of it. But this is enormous. The U.S. is known for its ability to do this.
Right. Well, and I mean, one of the other reasons for this many options really is just due to the fact that the United States is based upon a contingency fee type of attorney. And, you know, for the asset protection side, whereas a lot of other countries have the loser pays system. So the litigation aspect is, if I lose and I got to pay for it, I'm not going to file a lawsuit.
Right.
So
we're also the most litigious little great
exactly,
country.
Exactly. So definitely the use of the entity structures. But going back to what Laura was saying is when the rich keep getting richer and the poor keep getting poorer, based upon the transition, everything that we knew about taxes and deductions back in 2017 was essentially flipped on its head. And so the tax code has now been written more for a corporate owner or a corporations where individuals in the W-2 position are getting just hammered in taxes.
And I want to bring up a number over here, because when they say the rich are getting rich and the poor getting poorer, we're talking about the rich employees getting taxed, because over here we get to do deductions. Like I, have many of these, and I only make $48,000 because it's the worst kind of money to make. So again, don't run out and quit your job. Get one of these. Get a system to organize your life. And over here, here's the shocking number, is the top 25% of the wealthy only need to make just under $70,000. Right. The top 25% of W-2. So those of you making $70,000 or more, congratulations. You are now in the top 25% of the wealthiest in the United States. So the number is shocking of how little the money is.
Well, and, the tax rates for individuals who are making $70,000 to $100,000 are just astronomically high. Mm-hmm. Whereas, with the new changes in the tax code, utilizing, let's say, just the structure of a C corporation alone, has a flat rate of 21%. So whether you make 50 grand or you make 50 million,
I was going to just say that number, yep.
Then it's only a flat tax of 21%. So you look at that as, okay, if you're $70,000 to $100,000 wage earner and you're upward of 28 to 32% just in federal taxes alone, then you have to look at your state tax and add that in. Now you've got your, what I like to call silent partners dipping into your pocket to the tune of 55%. Yeah. So again, utilizing these structures, being able to take advantage of business trips, being able to write off.
So I want to just say, go get a pen and paper. Let's go down the list of some of the dissection. I know you and Mike have done a great job. Mike's father's a genius as well on the team of dissecting the code. And it is, the rich are going to get richer, the poor get poorer. So you can whine and cry out there, or just come get rich with us. Let us help you.
Right.
So C Corporation, number one, is 21% flat tax. So if you don't have one, and again, don't run out and get these things. We're going to have an integrated conversation with you. We're going to talk to the whole team. You're not going to have to bridge the gap. You're going to have brains that'll help you, conversations to bridge the gap. Many of you, you're like buying real estate on a regular basis and you're not using proper structures. So let's get to the list. C Corp, number one, awesome. What other deductions are in the tax code of 2018?
Well, I think really the biggest one comes down to qualified business income. There's a lot of companies or a lot of real estate agents, attorneys, architects, people of that capacity out there that were used to taking advantage of certain deductions. And ultimately, they've eliminated quite a few deductions, but based upon qualified business income, and that's going to be what's ever on your Schedule C or distributed through your company, they're allowing us to take a 20% deduction right off the top. So let's say, 80 grand comes out and you take that 20% deduction. Now your taxable liability is really on 60 grand, right?
Right.
So, that's just huge. But you have to make sure that the business is structured correctly because, like I said, service-based individuals are not afforded that QBI deduction. So there's additional strategies that need to be employed through multiple different entities to create that QBI distribution.
The qualified
business income, exactly. And that's really just, utilize it, like I said, utilizing the different structures. Maybe you already have a corporation set up or an S Corp set up and you don't fall under that QBI aspect. There are strategies that we can employ to set up like a management company or a billing service, whatever it is, to allow us to take advantage of that fully.
Yep. And now let's talk about some of the deductions, because I even, ran into one the other day. I was inviting someone to move out, right?
Yes.
And so moving deductions, not allowed anymore.
Right.
You can give them a bonus, but you cannot do a moving deduction. Let's talk about some others that are off the table.
So some of the other ones are meals and entertainment. All right. A lot of us used to go out. We take a client out and then we go for a round of golf, call it associated business entertainment. The IRS said, nope, sorry, not available anymore. So, we still can take advantage of business promotion, which is fully deductible to the company, but it's just worded a little bit differently, if you will.
It's reclassifications.
Reclassifications, correct.
Reclassify. Exactly.
So, I mean, that's really some of the big ones. You still can take certain meals and entertainment if it's a legitimate business meeting.
Right.
There's appropriate documentation supporting it, that it's pre-planned. It wasn't, hey, Joe, I met you at the bar and we're going to have some drinks and write it off anymore.
Right.
It has to be set up perfectly. Some of the other things, being able to, what are some of the other ones?
Well, the one I want you to hit on too is the trust has totally changed. Like the amount that you can pass through upon death. Like the trust number is thank you, current administration.
So based upon the 2018 tax changes, the lifetime gifting exemption is now $11.2 million. So if there's things that we want to be able to gift to the beneficiaries now is the time to do that. And again, through the use of the trust, so we're gifting it appropriately.
Right? So up to $11 million you give away. Now, some of you watching say, I would like $11 million in my lifetime. We'll start living the way we do. So this is the thing I want to say about this. These aren't suggestions, right? These aren't like, and we're not telling you what to do, but we're telling you this is how wealthy people live. Right. And what we're here and our team is here in Off Wall Street Assets is to teach you, how do you start living like this? Many of you, here's what I know, and you can speak to this too. Many people have parts of the puzzle, but the puzzle's not cohesively together because this person said this advisor said this stockbroker said this accountant said this. So you've tried to cobble together your masterpiece called your financial life, and there's a lot of pieces missing, and they're out of order. Right.
Well, I think the bigger thing is if you don't know what to ask, how do you get a proper answer, right? And if the CPA is not aware of it, most CPAs aren't going to come to you and say, here's some ideas you might want to consider in the business.
Right.
They're just going to say, okay, well, the numbers look good. We'll go ahead and plug them, and here we go. So again, you got to be financially literate, in the know of what's going on, have a team supporting you to be able to take advantage of all of these businesses. Like you said, live your life like a business. It's a lifestyle. It's not a program.
Right.
Exactly.
You're not just going to sign up and we're leaving you.
Right.
And once you get an integrated team, because that's way back in the Rich Dad Poor Dad, like when Keith did the Rich Dad Advisors, great concept. The problem, honestly, because I was there, is all of us wanted to be our own. We wanted to do our own books. We wanted to do our own stages. We wanted our own databases. So it all fell apart. So what's different is creating a team of people who like to stay in their lane. They own their own companies. They get to do what they want. On our team, anybody can write their own books. If they want to write a book, they can take stages. We share. It's a collaborative effort on your part. And that's the integration that we provide to you. That is extraordinary. So what we're going to do is talk a little bit about the tax report that is available for those of you that take action today with us.
Okay. Yeah. So what we've developed is we'll basically take you through a 3-page questionnaire. It's very simple, just giving us an understanding of what kind of assets, what kind of investments, and at which point, and we would want to look at 2 years tax returns, things like that, just so we know that we're gaining the most benefit, if you will. Knowing what the AGI is, what the taxable income is, we can generate a customized report that would be specific to you. It's not just generalities. It's specific to the investments you're in, whether it's real estate, whether it's oil and gas, whether it's in the stock market, or you just have your own business. It's going to outline all the different deductions. And the beautiful thing is the way that we have created it is it's all backed up by the IRS publication sections. So if there's ever any doubt, any question, whether your tax preparer is doing the taxes or you have another team doing it, whatever it is, they can go to that publication section and identify exactly what is deductible and how to do it. So it's building this blueprint, knowing how to move forward.
Yep. And in some cases, you're just going to say, Scott, you and your team do it because they have CPAs, they have bookkeepers, corporate compliance folks. Those of you that are listening, they're doing it for me right now, is corporate compliance, going back through and just making sure that everything is documented properly. Like you just don't set these companies up and then let them fall. And I've seen a lot of programs, seminar companies where they allow an entity person to come sell and it's a one-time sale and there's no follow-through. So do you know, and this is a question, do you know that your corporations are completely documented properly and they're not in default and that you paid everything right? So our invitation to you is let Scott's team review it. Go back through, make sure your I's are dotted, your T's are crossed, and make sure things are really right. So you have confidence. The thing I love about what we do and how we teach this is people say, you know what, I finally can sleep at night, like really, and I feel confident that I'm going to make it to my freedom day.
Right.
And not retirement day, your freedom day, which means you got to learn spreadsheets. And if you don't like to put them together, they can put them together for you. So thanks for joining us.
Thank you for having me.
Those of you will continue on this conversation for about 10 more minutes or so. And then we're going to give you an invitation to meet with Scott and his team as we work together.
Perfect.
Thank you.
All right. Thank you.
So again, we appreciate you being here, spending your time learning this with us today. The work is all based on my 2006 first bestseller, January 21st. We hit the number one in the New York Times, and we stood for a long, long time. People say, how can we not update the Millionaire Maker? Because it doesn't need to be. This structure and how this was designed is just how millionaires were designed forever. So those of you that have attended the webinar, again, if you are interested, put it in the chat. We're going to send you to a page that's going to give you a free version of my Millionaire Maker book. And my request is that you read chapters 1 and 2, especially number 2. So number 2 is about how do I ask 8 questions in 8 minutes to get you a money makeover, because we know what we're talking about. I'm just going to model for you today a money makeover, but when you really get one, you're going to get it passed around to several teammates, depending on what you've done to yourself. See, we don't have any criticism. I've been doing this stuff way too long to have any criticism about what you've done to your financial life. It's just a so what, you did it because you didn't know. Now what? It's time to do something different. What do you want is the first question. And then how do you want to get there? If you have a job, what kind of business could we create around it? What kind of investments do you have? What do you want? How does the system need to work for you? And the Millionaire Maker is designed. There's 7 families that became millionaires. There's blueprints that accompany their situation. There's 7 different sequences, models where one person might have been in debt. One person is running a business not incorporated. I call it the lazy asset people. They actually are close to $1 million, but it's really poorly invested money. So then we just give you a guide. We give you a blueprint on how to do it. So this will be our gift to you for attending our webinar and watching today. And also, as we go into this further, this money matrix. So the matrix, you're going to get this in detail, right? How to make money, how to keep money, how to invest money, how to do it with a team. And this will be a link where you can print this out, you can look at it. And then this is what we do, is we actually create a structure and introduce you to the folks that have the right licenses, the right capacity to help you assess where you are and then teach you and tell you where to go. So some people are educators, some people are actually licensed financial advisors. Some people are tax accountants, some people are lawyers, some are trust lawyers. So we got a variety of people. We have over 20 people on this integrated wealth team that we have put together. So this is what we say we do. We actually make you millionaires, and we do it in 3 to 5 years because we're going to teach you how to live this life. And this is why we do it. Because just like Scott said, there's a gap between you and all these conversations that you need to be having. You need to be having all these conversations. And because you're not educated with money, you don't know how. So I know a lot of you came because you want this tax stuff, but it can't come by itself. I want to show you how a matrix, how a plan, how a blueprint for your life is going to get you what you want. Let's show you how a makeover is done. Okay, so what you're going to do when you read chapter 2 is you're going to go through the 8 questions. And the form that we're going to give you on our link when you sign up for a makeover is going to be a little more sophisticated than my handwriting, but basically we're going to be asking you, how do you make money? What's your income? What are your expenses? What does it cost you per month? Right? And then if you have a business, what's your cash flow? Right? And we're going to be asking, what are your assets? What are your liabilities? What's your net worth? Right? How does all that work together in your current? So this is your baseline. This is where you are today. And then this is where it gets really fun, is what do you want? And I call it Freedom Day. Right? So what do you want? What do you want your income to be? And not only that is, how do you want it to come to you? Like I have a lot of W-2 employees. So even though I beat that side up, I'm employed, but I want you to be in the right employment. And if you are a high income earner, right, over 70,000, you make 100, 200, you're being taxed the most. I have taken people that are making 400,000 from a 52% tax bracket down to about 11. When I say I'm meaning our whole integrated team of off Wall Street asset folks. So what kind of income? How much is W-2 and how much is incorporation money? What are your expenses? What's your cash flow? What do you want it to be? How much cash? This is really Freedom Day. How much cash flow do you want per month? Do you want 30,000 per month? Do you want 50,000 a month, 100,000 a month? What do you want per month? And as an adult, you only get like 10 as the minimum. Then what do you want in assets? If you could build a portfolio of all these cool off Wall Street assets, what would you want? Right? Do you want to be in the cannabis business? Do you want cryptocurrency? Do you want gold? Do you want real estate? Do you want oil and gas for the depreciation schedule? Do you want aircraft? I mean, I have some guys that own airports and hangars. They get huge depreciation. Like, what do you want if you're going to design your life? And some of you I know right now today are saying, I don't know. So let's have a conversation. Let's decide. Let's do it together in a learning process so you understand. What are your assets? What are your liabilities, right? What's that net worth going to be? I have a lot of clients who say, when I hit 10 million is my goal. So then let's make a plan. So this is what you want. This is where you are. This is the gap. And so we call this a gap analysis. So a gap analysis is looking at where you are versus what you want and putting a plan together, an income plan and an asset plan. And you're going to be meeting with a variety of teams. So we call this our big table. Our big table is where we want you to take a seat onto a smorgasbord. And a smorgasbord is you get introduced to all of this. We introduce it straight up front so you see the whole picture. I see too many programs and systems give you one piece and the next piece, and you got to buy another piece. It's just a one-time deal. It's a one-time membership into a mastermind and a mentorship, and it's for you and your family for the rest of your life. So we're going to teach you, and your kids are free. You got to start teaching your kids. If you want, I have a board game that can integrate it. Got lots of tools just to help you design your life, get your family's life financially right, and end up where you want. Have a goal for monthly cash flow. Have a goal for net worth. Arrive at those. Understand like Scott and his team, and we have a variety of other folks. We got Weldon, we have Rob, we have Lance, we have Kevin, we have Deb, we have Amanda, we have Mike, you name. We have experts in all these categories who are at your disposal for one membership fee. And the tax is where we start. So when you go to our makeover link, you're going to request a makeover. We're going to ask you some questions, and we're going to ask you to download your book, your Millionaire Maker book, which is our gift to you. Download the matrix, download the wheel, and download these spreadsheets. They can come in spreadsheet form, or you can just print them out and you can do it manually. We don't care how you do it. We just want you. And it doesn't have to be perfect. You don't have to do every penny. Just in the ballpark, where are you and what do you want? So we can help you figure out that there is a path for you. There's a path for every one of you. So our invitation is to teach you how to live this life. And we call it the big table because it's a smorgasbord. Depending on what you've done to yourself, you have to start. Some of you are going to start with appetizers. Some of you are going to start with dessert. Depends what you've done to yourself. And honestly, some of you are starving to death because you don't have a table set. So we have set a table of all the financial people that you need on an integrated wealth team for your disposal. And we're going to start in the tax side. So again, follow the link on the makeover to get your downloads and schedule an appointment. And someone from our team will be calling you to have a one-on-one appointment, actually with you and your family. If you're in a partnership, husband-wife team, I have a lot of siblings who are doing business together. So whatever your situation is, let us at least have a first conversation, completely complimentary on us, to show you what we could do for your life. Scott and his team alone are going to show you how you're going to save thousands and thousands and thousands of dollars. Ask for a 3-year tax return review. We've got people as low as $20,000 to as high as $158,000 back in taxes because they didn't know and they didn't have a good team and they didn't know how to navigate the team. They didn't know what to ask for. So that's our invitation for you, is to come be a millionaire in 3 to 5 years. You can do it. A lot of people have done it. The fastest we know of is about 152 days. So come join us. It's been great to be with you. Click on the link below to get your makeover, and let's begin today.
Thanks for listening to the Real Money Talks podcast. Your host has been Loral Langmeyer, author of 5 New York Times bestsellers, money expert on Dr. Phil, CNN, CNBC, The Street TV, Fox News, and The View. Want to learn more about off-Wall Street investing, tax strategies, and multi-million-dollar business strategies? Visit liveoutloud.com/podcast for past episodes, show notes, and resources. For some special wealth-building gifts only for Loral's podcast listeners, visit liveoutloud.com/podcast gifts. Do you have a burning question for Loral? Visit askloral.com to submit your question, and it may just be covered on a podcast episode. So stay tuned and be sure to subscribe to get new episodes every week.